Hey, everybody. Thank you so much for tuning in. This is Connor McIver, Connor with Honor, the Fat to Fit Realtor. I have Tim Slaminski here with me. We're going to be talking about lending here everywhere, but we're headquartered in Santa Clarita Valley. But Tim has a much further reach than that. And I do, but not as far as his reach goes with the loan and lending world. So I wanted to bring Tim on and let's talk about some loans and what's going on in the market November 1st, 2023. Good morning, Tim. How are you?
I'm great, Connor. How are you this morning?
Very, very good. I wanted to bring in something that you sent me here this last week, and I've seen it before, but I wanted to bring it onto the show so the people that are watching are going to be able to understand it. This is the California Employee Advantage Loan, so we're going to talk about that. Then I also want to talk about the jury finding realtors conspire to keep commissions high, awards nearly 1.8 billion in damages. That's from the Wall Street Journal, so we'll get into that a little bit for kind of maybe what that means. You've been in this game a long time, so I'd love to hear what your depth will provide as far as what that means to you, and then we can go back and forth and banter a bit. And then finally, that third thing that I really want to get into for the people is talk about that consumer approach and what that means to you, what it means to be able to be connected with, contacted, talk to, ask questions, and what your schedule kind of looks like, if you wouldn't mind.
Well, sounds great.
Very good.
Uh,
Let's talk about this loan program. Tell me about it.
so the California Employee Advantage Loan is called CEAL, CEAL. Who is that for? That's for the underserved community. Who's the underserved community? That is anybody that works in a state, city, agency in the state of California. So who does that go to? Teachers, police, fire, um, a office worker that works in a state agency, an office worker who works for firms like Department of Water and Power, for uh, LA County sheriffs, LA, city police, Santa Clarita, anybody. So, what does that mean to you as the consumer? What it means is that we are going to save you money. And how do we do that? The first thing that we do is we waive all our lender fees. So, what that means is there's no underwriting fee. How much does that cost you as the consumer? About $1,500. It's actually $1,473. Um, you are not a number, you're an individual. When you start working with me, I make myself available to you 7 days a week between the hours of 8 a.m. and 9 p.m. Because at 9:01, I fell asleep watching TV. So I do make myself available. And when you do call, I'm going to say, hi, Bob. Hi, Mary. How are you? Um, the other part of it is that with this program, we as the loan officer take a reduced commission. Why would we do that? Well, by doing that, we give you a lower interest rate. Our commissions are based on compensation. So in this particular case, it's a reduction of an interest rate anywhere between an eighth to a quarter of a percent on the loan interest rate, which is huge for you as the consumer. That could mean anywhere between $50 to $100 a month, depending on the loan amount. Okay.
And that's for 30 years if you have them in a 30-year mortgage. So that do the math on that. That's a lot.
It's huge.
Yeah.
It's huge. And the other part of it too is under this program, as interest rates go down, we can save you money by doing refinances. So if I see a reduction in the interest rate of 0.5% in the normal interest rate, I'm going to reach out to you and say, hey, it's time. What does that mean to you? That could mean anywhere between, another couple $100 a month. So it really improves your cash flow. Um, with this program, we find that it eliminates you having to shop the 1-800 loan guy. The 1-800 loan guy, the big box banks, they're not available 7 days a week. We treat you as family. I actually get to know all of my clients. I go to their homes. I've been invited to the parties. That's what it's about. It's relational. Um, I've since we instituted this program, I have basically done about 25 to 30 of them. It's huge. It's just a huge savings. Now, as a realtor partner, we ask the realtor partner to participate. So by us reducing our fee, in some cases, the realtors will contribute towards closing costs. And that's between you and the realtor. But my experience, and especially with my partner Connor, we've done that. You know, we match dollar for dollar. If I'm giving up 1,400, he's giving up 1,400. That's a $3,000 savings. So really a great program for you. And that program will allow us to do the following programs. It will allow us to do FHA. It will allow us to do VA. It will allow us to do what is called Home Ready and Home Possible. The Home Ready and Home Possible are income driven and also census tract driven. So that what does that mean? There's reduced loan level pricing adjustments put in place by Fannie Mae and Freddie Mac. And that's a whole different conversation we could have one-on-one. But overall, it's some great programs for you.
Let me ask you this. You mentioned, and this is besides the program, you were talking about refinancing kind of being baked into this, or you mentioned half a point or half a percentage point. I've always said that if it's not there, it's probably not worth it to refinance. Is that a proper statement, or what's your view of refinancing?
Well, refinancing makes sense if we're going to be reducing your overall outlay and cash flow. Okay. I work with a title and escrow company that I get reduced fees. So it really is advantageous for you. So under the CEAL program, again, I have no fees, I have reduced fees. So it makes sense. My thought process is it has to be a minimum of a 0.5%. But depending on the loan amount, whereas right now the new federal loan limits are going to go over to $1 million. So if we reduce an interest rate of 0.25%, that's $150.
Right.
$150 is $150. That's 2 tanks of gas at the current prices, you know?
Sure.
So, and it really depends on the recoup, but in a refinance situation, I would say that my hard cost with the CEAL program, and this is just title and escrow, is going to be about $1,300. So it definitely makes sense because you could recoup that in less than 10 months.
And elsewhere, what would those fees look like?
Um,
You look at those pieces of paper from other companies all the time. So what's something like that look like?
Well, so normal processing fee. So processing fee with most companies can range anywhere between 1,200 to $2,000. That is a processing underwriting fee. What does that fee cover? That covers salaries, it covers rents, it covers, cost of doing business. Then you have title and escrow. So if you go with just a normal title and escrow company, you have the fee that they charge, which is their processing fee. Then they have a loan doc retrieval fee, a loan doc archiving fee, a loan doc print fee. You know, that
Sounds
could
like the
end up
political
being,
government.
it
Let's put
could
all these things
be,
in there.
it basically could be an additional $600 to $700 in fees that I don't want to say it this way, but it's a profit center. Um, but it's a fee that when I'm working with my title and escrow company, I get reduced fees. So the only fee you're charged is the escrow fee and the title policy fee. There's no additional fees. Okay.
One more thing with the refinance. Do you also look at time that they have left on their mortgage? Because when you do a refinance it starts it all over, right? You're at a 30-year mortgage if that's that refinance program, right? So if you've been paying 15 years in, do you also look at that and say, well, maybe if you look at the end of this, maybe this isn't worth it for you?
Well, that gets into what I talk about, debt reallocation. So I'll take a look at, most of my clients, and, in my career, I've done close to 2,000 loans. So those people that I have relationships with, I will actually say, hey, you're 54 right now. Let's look at doing this in 15 years. You only owe this much. Look at how much we're going to be adding to your principal on a monthly basis. The other aspect of it is, okay, let's take that debt that you have and put it into the mortgage and get rid of that so you only have one payment. So take the payment that you would be applying to the credit cards and put that on top of your mortgage payment, and we can actually pay the house off. If we restarted at 15 years, we can, or let's say we do it at 25 years, because there's not an appetite for investors to do 15-year loans. They just don't like the price, So we go back to 30 years. If you just take that extra money and apply it to your principal, if you make one extra payment a month, a year on a 30-year fixed rate mortgage, you'll save yourself 3.5 years. If you do two payments, it's 7. If you do 3 payments, it's now 10. So you could actually do that 30-year in 20. So definitely a lot of different options.
Oh, that's super valuable. That's a great explanation of that. You always hear people saying, well, if I make one extra payment, and that's towards principal. So a person, if they're going to do that to their mortgage, they have to make sure that the bank absorbs that just towards principal and not both, correct?
Correct.
So is that done via they phone
On your
calls
online
or?
statement.
Okay, I see.
So on your online statement, it allows you to, do that. But let's say the other side of it. Let's say that you run into a windfall of money. Okay. Let's say you get $30,000.
Yeah.
You can do what is called a recast. Most lenders will allow you to take that $30,000 or whatever the dollar amount is and apply it to your principal. What they will do, and not every bank does it, but my experience has been 95% of the banks that I know will do that. They will actually take that 30,000, keep your same interest rate that you have. Let's say I had you at a 3.5% interest rate. Okay. You could take that 30,000, you'll still retain that rate. They'll reduce your payment, and it does not increase the term. Now, from a greedy standpoint, as a loan officer, let's refinance. Let's refinance. That doesn't make sense. It has to be a win for the client. So those are the conversations I'll have. Not everybody's going to pass up a commission. I will pass up a commission because what's best for you is best for me. Because if I do that for you, you're going to tell people about me.
Right.
Simple.
Yeah, that's so simple. It's hard to do for a lot of people in our businesses. The I wanted to talk about so this program, the SEAL program, is something being offered by Draper and Kramer exclusively. This is their program.
This is a program that we created. Actually, one of my fellow loan officers is a teacher, and he was the one who brought it to the table with this company that we're with. Well, we've worked together at a couple different companies, and he's tried to get the people to buy into that. Well, this is for California only. Presently, our company is now looking to implement it throughout the whole United States.
Fantastic. Very, very good. Okay, so that's perfect. I will put information and put a link to this flyer in the show notes, so it'll have both my information, also Tim's information.
Perfect.
The second part of this is want to talk about this award that was given. The jury finds, this is Wall Street Journal this morning, October 31st. Jury finds realtors conspire to keep commissions high, awards nearly 1.8 billion in damages. So coming with some other real estate companies that have decided to sever their memberships, not because of this per se. It was, I think one of them was a sexual harassment deal that happened somewhere with one of the companies. They wanted to pull out of the realtor board, but not because of this, but again, because they left. What are your views on this? What does this look like to you?
Well, we're in a consumer-driven society, okay? And I haven't read the full findings of it, but one of the things I heard was part of this was they were wanting to get to reduce fees because they feel that the realtors are making too much money. And the again, this is what I've heard. I have not read it,
Of
or
course.
haven't done all the research on it, but they want to determine or let the consumer determine the commission to be paid. But that is potentially meaning the consumer is going to have to pay the commission. So
So the buyer side paying his realtor to represent him, and then the seller paying their own realtor to sell the house, instead of
right,
as it is structured now, where the seller picks up both of those sides,
the seller. So
or
it
the
is
seller.
and I think that is where this lawsuit all started from. Um, but that's a whole different subject, and there's going to be a lot of legalese in that, and interpretations are going to be, well, I see it as this, another person may say I see it as that. So
Yeah,
it's an area that I stay out of. It's not my sandbox.
got it. What I was going to ask you, you've been doing loans for quite a few years now.
Mm-hmm.
I see these companies have come and gone. If we're talking about commission structure, discount companies, companies that say that they're MLS entry only and there's a very flat fee, a lot of those models completely collapse over time. Do you have any idea why that might be? I have an idea. It might be availability and communication, which is so necessary in a real estate transaction. What are your thoughts? Why don't those companies that come in, why can't they Walmart real estate like they can Walmart clothes and Walmart dog food and Walmart, towels? Why Nordstrom and Walmart? Why does Walmart work in that model, but these discount brokerages break in real estate?
There's a cost of doing business. You got to pay to put the lights on.
Mhm.
You got to pay for administration staff. So if you, as the realtor or broker, say, I'm going to do this at a 1% commission, well, that's 1% to him. But then there's because he's representing the seller. Okay. Well, who pays the buyer? Well, that 1% does not cover the buyer's agent's commission. So it is a situation to where um, the 1% commission broker may not be providing the level of service that needs to happen to market that property. Because as salespeople, am I going to go sell a property where I'm getting 1%? Or am I going to go sell a property that I'm going to get 2.5%? I'm going to go sell the property with 2.5%.
Sure.
So that's my take on it. It's a level of service. Um, Being the cheapest doesn't mean you're the best. I would rather be with an agency that is going to represent my interests and get my home marketed. Because if I've got a 1-ply tissue
Mhm.
and I can get a 3-ply tissue for the same price, I'm going to use a 3-ply tissue. I mean, that's really the only way I could truly explain that one. Uh, you know, it's a level of service.
There's a lot of places to go with what you just said, but I'm not going to. But I totally that's a beautiful analogy. With regard to these discount brokerages, something else that strikes me is when you try to lower that commission structure, you're kind of missing the prevalence in the market. What I mean is you have all these houses for sale. You have, just like you said, you have the normal market commissions being offered, and then you have that one that's a lot less than that, or maybe not even available for commission. Most of those agents that have buyers, because not there's a lot of loyal people in this world. There's a lot of loyal
Yeah.
people that aren't going to go anywhere but with you, Tim, to borrow money no matter what. I mean, they will go to you, they will bleed and die for you basically to have you do their deal. And the same thing in real estate exists. And we have our own coffers of buyers. You have coffers of people wanting to borrow money. You move that into the real estate realm with a house that's available at a discounted commission. There's a lot of power that agent has when they're representing their people to bring them into the residence. And just like you said, I don't think that seller that's accepting that discount commissions doing themselves service because they're cutting out a lot of people that potentially would come see it, but they won't.
Well, and also to that end is in that case where it is the 1% commission, I'm not doing your open house. I'm not going to be there on a Saturday between, 1 and 5. I am not going to be, you know, um, going out there to do this for you. Well, that's part of cost of doing business. Yeah, I'm only going to charge you 1%, so on an $800,000 house, you're looking at what is that number? So 800 times 2.5%, you're looking at 16, you're looking at $20,000. Okay, so potentially you've got $40,000 in commissions going out on both sides. So 2020. Okay. Well, the guy getting the 1% is going to get 8,000, but I'm not doing your open house. Well, what do you mean? Well, you've got to do that. You know, you've got to put the signs up. You've got to go out there. I'm not going to provide you the signs. You're just going to put up this cheesy open house thing. You're going to be there and you're going to be overly pitching your home, whereas the professional is a professional salesperson. They know how to market it. So that's my opinion.
Agents is just for the folks watching. Before we get into our last topic, there's a lot of money that comes out of pocket before we put a property on the market. I don't want to be embarrassed. I want to have a nice Matterport walkthrough virtual tour done by a professional photographer. I want to have all the advertising marketing in place. And these folks don't take IOUs. They don't care if that property sells or not. They're a point of sale purchase. They come out, they do their photography. You're handing them money, and that's money that's going to come out of a future commission that my seller is going to be paying me. So there's a lot of that paid for up front, definitely.
Well, because you as the realtor are making an investment. You're investing in that client. You're investing in the future sales that you may get from them. Because if you do a good job, like you said, they're going to be loyal to you. It's like, do you have a realtor? I got my guy. I'm going to Connor, or I'm going to Steve. That's how it works. Loyalty is a very important thing, and the job that you as realtors do is you work your tails off, and it's all on the if come. It's like going to Las Vegas with $20 and hoping you're going to walk away with 200.
On that note, talk about a little bit communication. I ran into a client working with a lender last week. He wanted to ask him a question at 6:30 p.m. on a Friday, and he had his cell phone. Don't know how he got it because I don't think that was his intention to give it to him. But he rang it off the hook. Finally, the guy picks up and says, "I'm not in the office till Monday at 9. Quit calling me," and they hung up on him. And then they call me next, of course. And what do I do? you know, Maybe you should think about a different lender. He said, "Well, we've already come so far." I said, "Well, I can make some calls. Let me figure this out because I know we're deep into escrow. And if you're going to switch lenders, that could be an issue." But maybe it's a conversation that needs to be had, or at least this guy needs to be kind of explained. Hey, you need to answer these questions. They have to know at these times. Tell me about your communication model.
Well, I've been in lending in various aspects of lending since 1980. Okay, I broke my teeth in the automotive industry. In 2000, I got into the mortgage industry, and I saw a post today from one of my realtor partners, and it says, to be successful, you've got to get up, dress up, show up. Okay. You have to make yourself available. Talk up what you do. When I meet people, the first thing I ask them is, what do you do for a living? I don't say I'm a loan officer because it's not about me. It's about you as the consumer. Um, I make myself available to you 7 days a week. My family sometimes doesn't like it. But at the same time, if what's important to you is important to me, there's not a, I tell people there's not a stupid question. The stupid question is the one you don't ask. So you can call me. I'm going to tell you what I know, and I will make myself available between 8 and 9. Okay, 8 in the morning till 9 at night, and I will answer the phone on the weekend. And when you call, I'm going to call you by your name. I'm not going to go, "Hi, this is Tim. How are you? Who am I speaking with?" I'm going to say, "Connor, how are you? What's going on? What can I do to help you?" That's what it's about. Um, I went to my doctor's. I was trying to fix my doctor up with my daughter. Okay. And come to find out, he's like, "Well, how many kids do you have?" I said, "Well, I have three. My oldest is an attorney. My son's a lineman. My youngest is a realtor, notary, and a flight attendant. I'm looking for a realtor. I want to buy a house." Well, we end up, she ends up getting him into a house, and he's doing a doctor loan. Doctor loans are they're great programs for doctors. It's, reduce fees, everything. He went to a big box bank. The big box bank was never responding to the realtor. The big box bank lender was going to the listing agent, not talking to the buying agent, never could get anything. Well, I reached out to a friend of mine. Thank you. I reached out to a friend of mine, found out that we could not do the loan. I went to my doctor and I said, "Hey, by the way, didn't want to do your loan, but I can get it done in 10 days. So that's what it's about, understanding what it's about and being able to help the people. So,
Tim, thank you very much for coming on the show today. I know we're going to talk again next week. We'll put it up on the schedule, but for everybody watching, next week we're going to get into something called being able to assume somebody's loan and maybe holding on to their interest rate and what that means. So if somebody's been financed, I want to get from Tim what loan programs would work with maybe that could be transferable. And if this is one of those smoke and mirror games that we hear about so much out there and there's really nothing to it. But we'll discuss it next week with Tim. Until then, I appreciate Tim coming on. Thank you very much, Tim. And we will talk to you soon.
outstanding. Thank you. Look forward to it.
My pleasure. Everybody have a fantastic week. Be safe. It is November 1st. And when people knocking on your door, make sure you look, see who it is before you get too happy and open it. Take care.